Look, pockets looking cakey like these bummy bitches. Makeup, it's room service, bitch. The game requested that it get waked up. See, all I see is paper, like my secretary stapler. So if this was your job, then I'm thinking you're about to get a pay cut. This is my lane, so fuck road rage, fuck your anger. I swear they wanna cuff this pretty young thing like a Baylor. Cause I'm cute and I be killing games since back when it was Sega. I be reppin' Texas, but I'm so Cali like a Laker. Yeah, I'm kinda cocky when it comes to what I'm made of. Cause we ain't the same and they don't want you from the waist up. You the cookie cutter type and they call me the baker. And all I see is numbers like a kill pager. I kill them and collect them, watch me murder glass cases. Swear you bout to feel where the fuck I'm coming from like a taser. Cause if she fuck with me, then not even the captain finna save her. These bitches thinking they beefing, fuck around and get fed later. Looking, I don't see no difference. Cookie, all these cookie cutter bitches. Fuck these bitches, oh, cookie cutter bitches. Looking.
Hey, it's so late, and this is episode 616 of the Orange Pill Investor, and today we are going to be talking about cookie cutter bitches. That's right. Somebody was asking me, hey, we cover strategy, we cover Strive. Everybody knows about MetaPlanet. And was there anything else that's like on my radar? And my immediate answer was not really. I mean, between those three, and really I only just recently put a couple $100 into MetaPlanet, almost like a show of solidarity more than anything. They don't have options, so it's not really in my wheelhouse. I just transferred like $500 to E-Trade and call it a day. I'll probably just forget about those shares for a while and maybe come looking at them if Bitcoin starts to do a thing. But between the Bitcoin treasury companies and then Tesla, I really don't feel that I don't need another asset to trade for like the next 10, 20 years. And by then, like trading may even just become irrelevant. And I can just walk around on the beach all day and not really give a shit. But if it's still fun to do, maybe I'll keep doing it. But I figured, what? Why not just ask AI the simple question and then maybe refine the question and see if there's anything that we can glean from the different Bitcoin accumulation strategies and see if there's any golden nuggets in there, or maybe from what I saw is just some avoids. And sometimes it can be less about finding the next Tesla or finding the next big thing, but avoiding the worst thing. If anybody's ever memorized basic strategy for playing blackjack, if you're dealt 16 and the dealer's got an ace or a 10 up, you are fucked like 80% of the time, right? But that doesn't mean that you should just double down on 16, like a hard 16. That's just going to make things fucking worse. So when you can, you want to make your situation better. And when you can't, you want to make it as least bad as possible. So that's kind of my overall thinking with adding positions to my portfolio. All of the TradFi people that I follow, options traders, it's very difficult not to get distracted by anything that has high premium, anything that's the new thing. And it's I don't know, it's just like a freaking German Shepherd getting distracted by every squirrel that goes by. And you just want to put a little something of everything into your portfolio. Number one, it usually doesn't work out. And number two, it becomes too hard to manage. So you have to continuously be pairing and trimming away just to keep it manageable. Because I don't know, maybe with AI, we'll be able to have AI monitor each position, but manually, like trying to keep up on 10, 20 different stocks is probably not even possible without AI, and it wouldn't be fun for me anyway. So let's just take a look on this question that I asked Grok. What's up, Buffalo? Hey, back. Sandeep, massive volume of shares of Stretch for sale just under 100. Must be people, funds like me that bought the dip just 10 days ago and cashing out before the next post divvy dip. Yeah, and that's a weird thing of there's people that are jumping into it before the dividend to collect it, but then of course the price is just going to go down. And there's people buying the dip anticipating selling it before the dividend because they're like, screw that, I'm just going to take this little bit of a scalp. And yeah, there's a whole lot of weirdness going on with that. So I asked Grok, compare the different Bitcoin Treasury acquisition strategies, um, and focus on uniqueness, similarities, and efficiency, stuff like that. And a quick side note, uh, this show ain't gonna be no cookie cutter bitch. I can promise you that. There's gonna be way more cussing involved than your average financial or Bitcoin channel. Um, hopefully it's a little bit more than just cussing, but the cussing's fun too. Top 20 public BTCTCHES. Obviously, we got strategy at the top. Uh, 21 Metaplanet Mara. I had never really heard of this one before. Maybe I should have. Oh, that's CEPO. I might have actually bought a share. I went through and bought like one or two, like a couple, like a share or so of each, a bunch of these companies in the top 10, just in case they come out strong on the spam issue. And if the reduced data temporary soft fork is unsuccessful, and if Bitcoin's use case and value drops because it becomes just distributed data storage for degenerates and perverts, then I would be happy to jump in on the class action lawsuit for any of these publicly traded companies that are spammers, right? But anyway, that was just a fun little thing. So CEPO, I mean, BSTR doesn't sound familiar, but CEPO does. Bullish, heard of them, don't know what they do. Riot, obviously miners. Coinbase, Shitcoin Casino. Strive, there's our boys. Ben and Jeff. Hut used to trade that one. I can't remember what news I heard about them. Oh, I think they're affiliated with Trump. So that's a net negative in my opinion. CLSK I still trade. I haven't heard anything disqualifying about them, but I you know, I don't go looking for news, but if some news drops in my feed, then I'll pay attention to it. Tesla's down here. Trump, I think this is another one where I bought one share. Certainly not Bitcoiners here. And then Block. So let's get to the categories. So Grok classified these in 3 different categories. So we got the finance treasury plays. Obviously, strategy is the big dog here. And they are, they originally started, they just basically took their cash, bought some Bitcoin, then they were like, oh, the market loved this. Let's borrow some money, basically bond deals, convertible bonds. Let's buy a bunch more. And then they have evolved that into the preferreds and basically issuing credit to raise more money. They ATM that platform, they ATM the common. But I guess you can I guess we're also including in here, um, let's see, Bitcoin collateralized loans. They haven't done any of that. Example, obviously, strategy. 21. I had high hopes for them, but Mahler's just doesn't seem to get it. I don't like partnering with Cantor Fitzgerald. Lucky Lutnick. It's too close to good old Lucky Lutnick for my tastes. They're also in bed with Tether, which, you see the old school meme. Like, this was even before memes were memes, of the guy who walks around with the sign that says the end is near. Well, there's some Tether FUD, the end is near, prophecies. People just won't let go of the Tether FUD, and I guess I'm one of them. It just won't surprise me at some point if some black swan event happens, and it's because, like, Tether is attached to it. I think Matthew Crider used to sound the alarm about some Tether FUD back in the day, but then he kind of came around and was like, I don't know, maybe these guys aren't so bad after all. He's been overwhelmed with the spam war and really hasn't been paying as much attention to the stable coin folks anymore. But he was, back in the day, he was on the forefront of that. He was warning people, I think, about the Celsius meltdowns and Luna. Maybe not Celsius. I think probably Celsius too, but I think for sure Luna. He was covering some of these things before they went to shit, and probably saved people a bunch of money. And so it really wouldn't surprise me if Tether is involved in some black swan in the future, and will have proven to be right, just, or not wrong, just early. Metaplanet's in here. BSTR, as mentioned again, bullish. Here's our boys Strive. Uh, Naka, wouldn't touch Naka with a 10-foot moto. And so, am I finding anything in here that is calling out to me? No, not really, but there's a few names that are are hollering stay away. So I'm staying away from 21. I'm staying away from Naka. Let's see, miners. I think publicly traded mining companies are doomed. It's I really like Bob Burnett, who runs Barefoot Mining. So he's like a mid-level, and he just seems smart enough to be able to find places where he can get cheap electricity. But instead of being smart, these publicly traded miners just go and raise capital. And so they hype up the capital raises, they spend a shitload of money on miners, and then that they just have no fucking plan. They just assume that this is profitable, and really this is just me, like, guessing why, if they're not successful, they won't be. And I think it's just kind of it's like the worst combination of Bitcoin and fiat is publicly traded mining companies. I don't like the centralization effect of it. Um, Mara is an absolute shitcoin. They are one of the few miners that has gone on my will not own list. I think Riot sold some Bitcoin, which I don't hate on selling some Bitcoin. Like, you should always believe in your stock more than anything else, including Bitcoin, right? So Bitcoin per share in a hyper Bitcoinized world is the only thing that matters. Hut 8 is doing deals with Trump. They can get fucked. CLSK, I haven't heard anything disqualifying about them. American Bitcoin Corporation, I don't know who that is. But mining companies are what I use in my small accounts, or what I use in a small account that's like geared to show other people that are trading small accounts how to generate some premiums. It's not that I believe in the miners long term. It's just, hey, I've got $5,000. What tools can I use? Well, I can't afford strategy. Can't afford Coinbase. Can't afford a lot of these things. Now, I've really liked the fact that Strive is priced where it is because a 5K account can afford Strive. And so if you don't want to deal with the miners, but you still want a Bitcoin treasury company, Strive is, I mean, it's the only one that I think has similar upside to the strategies and the meta planets of the world, and doesn't have like mining risk, and it's in the price range that a 5K account can afford. So I'm actually kind of adding a bunch of Strive positions. Um, I mean, I know those guys, so I know they're competent and they're working hard. So it's kind of a no-brainer for me. Who said you should invest in companies that you know? Like if you buy their products, then buy the company, because at least you can say that you get value out of their products. Um, yeah, I guess I'm close enough to those guys to have confidence in Strive. I guess I don't know. Do I have to disclaim that the True North show was purchased by Strive and I'm on the show, and maybe I have some kind of conflict of interest? They did send me a couple of checks. They sent me 10 grand for the work that I did on True North before it was purchased. So that was kind of nice. There was no contract or anything. They just said, "Hey, thanks for all the work you did. Here's some cash." And then I got sent me another grand after we did that. We did that in event, the Strategy World event. But that wasn't agreed upon ahead of time either. I would have done it for free, and actually I did do it for free. And they just said, here's $1,000 after the fact. So that was very kind of them. All right. Traditional operational cash flow. This is going to be Tesla. Tesla stands out to me in the sense that at least over the next 10 or 20 years, it's one of the only examples that I can think of where they'll actually make more money from their business than Bitcoin will actually go up. And that's kind of insane to think about. But let's just use Michael Saylor's advice. In some interview that I saw, I don't know, a couple years ago, and it might have been related to the mobile wave, but he said that you invest in an asset when it is number one, disrupting, and number two, the clear winner. He often gives the examples of when Facebook put MySpace out of business, when Netflix put um, Blockbuster out of business, when Apple put Nokia and BlackBerry on the back burner. They were disrupting, and the people who were at the top didn't see it coming. And once you knew that Facebook was going to win, you could just full send into Facebook and ride that up. And that's the exact position that I see Tesla in. And to boot, they own a shitload of Bitcoin. So it's like, but I think the money that they make from cars will be dwarfed by the money that they make from Cybercab. The money that they make from Cybercab will be dwarfed by the money that they make from Optimus robots. And so, eventually does Bitcoin just get so big and like Tesla can't grow anymore? I mean, that's got to be a long ways away, because once they've got fucking colonies on Mars, it's like, okay, now there's a whole new addressable market, which is an entire fucking planet. And they're going to be the only ones on the planet. The question that I have is, are we going to need a new Bitcoin for every planet? Like, do we start mining with Bitcoin 2.0 on other planets, and now we have like a Bitcoin, interplanetary Bitcoin arb. uh, that'll be interesting. Or do we just mine Bitcoin on other planets? Like, how long would it take for transactions to be confirmed? If anybody was into the Ender's Game series, there's actually a 4-book series, and they invented something called the Crucible, which allowed for like faster than light speed communication. So, you know, we'll probably need multiple Bitcoins, at least one per planet, until somebody invents the Crucible and can sync up the transactions between planets. But that's a long ways out, and your grandkids can deal with that fucking problem. I'll be gone. All right, so Tesla's the big daddy here. It's the only one that I bother with. I don't know anything about Block. I know Coinbase is a shitcoin casino. I'm grateful to them for getting me started on my Bitcoin journey, but like at some point you have to just decide that shitcoins are scams, and can't I can't be part of hyping up things that are obviously scamming people out of their money. So if you're gonna list rug pulls, I can't get with that. Fuck the Trump shitcoin bullshit. Let's see, hybrids, whatever. So the similarities, everybody obviously thinks Bitcoin is a superior asset. You are exposing your shareholders to Bitcoin. The public markets, here's the big advantage. You can use leverage, right? You have access to, um, favorable loan conditions, and you can leverage against those things. The beauty of this is, and like I'm an anarchist with no qualifiers, so I couldn't give a fuck less about the SEC. But the fact that a lot of these companies are like avoiding transparency and doing everything that they can to avoid SEC filings, to a certain extent, that's a red flag. And like, but they're kind of stuck between a rock and a hard place, because since they're unregistered securities, they're illegal. But then at the same time, if they tried to register as securities, they probably wouldn't even be approved. So I don't know. Does Clarity Act solve these problems? I don't really know. But I have a lot more faith in companies that actually have to file things. And, you can go to Strategy and Strive's website and see a whole shitload of dashboards and all of that happy horseshit. Whereas shitcoins, it's just straight up Wild West. Let's see, risk reward tied to Bitcoin's price. All right, uniqueness, strategy. Obviously, they were first. Everything that they've done, everything that they have evolved has been first. Jeff likes to talk about a couple of advantages that Strive has over them. And, strategy has basically labeled their convertible bonds as toxic debt. And I think Strive only has like 1% in debt, like actual debt, and strategies at like, I don't know, somewhere between 8 and 10%. Maybe it's 9. I think somebody might have said 9 on the show last night. You could argue that, like, whatever strategy's parabolic move into the future, whether that lasts 5 or 10 or 20 more years, there's already been 5 years of it. So, you missed out on the ground floor. Metaplanet is probably the winner in Japan, if that's all you have access to. I think that's obvious. I already said I put a couple $100 into that, but it was, it wasn't like in size or anything. It was just kind of fun. I've met Dylan, and super smart guy, and that was kind of like enough for me. to buy the dip like a month or two ago. 21 already said, I like Jack, but I just think he's either intentionally missing the point with what strategy he's doing. Maybe he's incentivized to miss the point, but I don't like the ties to Tether, and I don't like the ties to 21 and Cantor Fitzgerald. So sorry, homie. Mars is a shitcoin. The other miners are just tools to me to generate premium. I don't believe in them. I have no emotional affiliation or attachment to them. Tesla, obviously, I believe in. I have not investigated Block. I have no idea. Efficiency comparison. So the treasury plays is the most efficient for rapid scaling. Like, I think most Bitcoiners, while we all understand that vol is coming down, and if you're a power law guy, you understand that it's still it's still like exponential returns, but it's muted compared to the 10x in 4 years type of stuff. I think it was Sminston With that mentioned some kind of formula. You take, if you want to know how long it's going to take to 10x your position, you take Bitcoin's lifespan, which would be 16. Bitcoin in 2009, so it might be 17 years now. 2007. Regardless, let's just say Bitcoin's been around for 16 years. You take that in half, and then I think it would take 8 more years to get a 10x. And so, when Bitcoin is 30 years old, you cut that in half. It's like, okay, now it's going to take me 15 years. If I'm starting from zero now, when Bitcoin is 30 years old and I buy 100 sats, I should expect those to double in value in 15 years because I got in 30 years late. So while we understand that there's diminishing returns, they're still better than everything else. But if that is true, then rapid scaling to get the most Bitcoin now, get the most Bitcoin in the next 5-10 years as possible is critical for long-term growth, because you want to get as much of the beginning of that parabolic move as possible, as much of the beginning of the S curve as possible, I guess is what I should be saying. And so, the finance treasury stuff is the most efficient for now. Mining, I can't get with publicly traded mining long term. It's not anything that appeals to me at all, as far as like, let me put this miner in my portfolio and forget about it for 20 years and do the dead man's portfolio thing. For me personally, mining is not interesting in that sense. And then the traditional companies, obviously Tesla is half my portfolio. You could find others. Now, the interesting thing to this is once most of the S curve has seen its adoption, then either strategy just becomes this giant fucking moat, and instead of being a tech stock, then it just becomes this slow growth giant monopoly moat thing that I guess is leveraged, but it's like leveraged low vol Bitcoin once it becomes like a fully grown adult, and all of the parabolic moves are over with, unless they can convert themselves into this traditional ops thing. They've been asked about this before. Are you guys interested in M&A and blah blah blah? They've said no, but eventually I think they'll have to, or just accept being kind of a blue chip, in 30 years. I think if you're the company on the planet that has all of the capital, then why wouldn't you become a venture capital firm and you can just loan out the Bitcoin for equity in companies, right? Company says, hey, I think we can cure cancer. That's worth some Bitcoin, in my opinion. But they would probably say no. But I don't see how, if you're a venture capitalist, takes the capital and invests in companies, and if you're the company on the planet with all the capital, that just seems like a no-brainer to me. So we'll see. Hopefully, I live long enough to see what strategy decides to do in 30 years, when 90% of Bitcoin's uh, like rapid growth is over with, and do they pivot to something else in 30 years? I mean, I would assume Sailor's retired too, so maybe it'll be Fong's job to figure that shit out. But yeah, eventually, like this is the smart play now. I think this is the inevitable play eventually that every company will have to have. You know, Sailor says you have to upgrade the world. Well, that's exactly how companies get people to give them money. So once they've cleaned all of the money out of the the bond market, you know, I don't know how long that's going to take, but you know, once that's done, they're going to have to figure out some way for people to want to give them money. And I think the inevitable option for every single Bitcoin treasury company. But for now, it's completely unnecessary, and this is the smartest way to get the most Bitcoin as fast as possible. So then I was like, okay, refine the finance treasury plays into categories and list the players utilizing. Maybe let's check the chats real quick first. Greetings, variety of intro songs is much appreciated. You're welcome, Colonel. Peter Lynch. That doesn't sound familiar. I don't remember what I was talking about, but I don't think it was him, unless I'm mistaken. Let's see. Refine the finance treasury plays into categories. I was wondering if it was going to identify the differences between like strategy, strive, and you know, like the M&A guys and things like that. So we got the comprehensive stack, multi-instrument, ATM, equity, convertibles, and preferred. This is strategy. You got preferred equity, perpetual yield specialist. Um, it'll be interesting to hear if Jeff likes this categorization, because they have mentioned one of the benefits of Strive potentially over strategy is they're laser focused on the pref. They skipped over the convertible bond thing. They did one merger with uh, oh my god, why are they slipping my mind? The medical company. Who did they fucking merge with or buy out? Semler. Um, but I don't. I mean, I think they would be open to doing more of them if there's a distressed company and they can get a discount on some Bitcoin. But that move seems like it was very strategic in order to get enough Bitcoin to issue the prefs. It was a very opportunistic grab, and they needed those Bitcoin in order to be able to do the prefs. And I believe they retired Semler's convertible bonds, and so they're like laser focused, whereas strategy still has some convertible bond debt. And you know, you could argue that Strive's position is cleaner. So it would be interesting, if Jeff likes this. If Jeff likes the way that Grok is describing their company, perpetual yield specialists. um, Metaplanet is in here as well. I forget. I guess the Mars senior adjustable rate thing is gonna be similar to the prefs. I looked into it, and then I forget everything that I even remember or learning about him. Mercury Junior fix with conversion option. Yeah, I don't remember what any of that is about. But these guys also sell cash secured puts on Bitcoin, and I shared Timo's research the other day, and if that is correct, then what I think is kind of obvious to the eye, that weekly at the money premiums are just kind of insanely high. Um, he's basically saying that they're overvalued, and Metaplanet has been doing this for years. And so they sell cash secured puts into the market. They generate premium. They use the premium to buy Bitcoin. And if the price of Bitcoin goes down, they get a favorable entry price. So this is kind of like, I think Saylor has been somewhat critical of that strategy. They certainly haven't employed it, so they didn't like it enough to do it. They'd rather just get the Bitcoin. But you probably, if you graphed Metaplanet's orange dots, you probably wouldn't see them with big, buys at all-time highs, maybe as well. Maybe Metaplanet's getting better entries than strategy. I don't know. That's just all hypothetical on my part. But if short-term options are overpriced, then they could actually be accumulating more Bitcoin by getting paid those oversized premiums and then buying Bitcoin with it. So as an option seller, I'm like totally down with the strategy that they're using. Let's see, you got SPACs, DSPAC. So, okay, so you can SPAC and you can DSPAC. You can unspac, you can anti-SPAC. Large pipe structured entrance. So this is going to be the BSTR CEPO. I don't know enough about this except to say that is this including mergers? No, M&A is down here. All right, so what is this? SPAC merger with massive concurrent pipe funding. Let's see, denominated in kind, often the largest single capital raises in the sector. Launched with 30,000 Bitcoin, but they already had them. Bitcoin via Cantor merger. Then they raised some more money with $1 billion. 300 million preferred. Wait, they had a preferred stock? I gotta ask about this. Yeah, I don't know. This just seems like what Elon Musk say, complexity appeals to stupid people, and this just seems like a lot of rigmarole. Let's see, options derivatives enhances Metaplanet. We talked about them already. I guess BSTR is doing some of this as well. They sell puts. Okay, maybe that works. Naka. Naka's like, that's the floor is hot lava for me. So I might actually just jump into the lava rather than own Naka. And I'm not just piling on those motherfuckers now that their price is down. That was my original take. I don't think Bailey's a Bitcoiner. Too much shitcoinery involved there. And I'm gonna alter this saying, but one of the best advice is that I heard from a podcaster, and he said the best advice that he ever heard, and now I'm repeating it and changing it to make it a little bit more. I don't mind cussing, but to avoid offending certain people, I'm gonna change this up a little bit. It said, don't work with idiots and don't work with anyone who works with idiots. And so the most bearish thing that strategy has done since I've been following them was Bitcoin for corporations and being like associated with Bitcoin Magazine. Like that just made me kind of like give a little bit of side eye. So it's funny how the bears focus in on all of these fucking things that are meaningless, and I'm over here like, no, there are some things that concern me. Like you know, I'm a Sailor D rider, but I also have some standards. Um, yeah, so M&A, I think it has a place. Strive did it. They did it for a specific reason, but I don't know if structuring a company around it, that as a strategy, is gonna work. Let's see, bullish. I don't know anything about bullish. All right. Yeah. Nothing really excites me from any of, like, I guess the thing would be, in the spirit of the episode, are there any companies that aren't cookie cutter bitches? And if you're just going to be a cookie cutter of another company's strategy, is there something unique about you, the way that you're executing? You could argue that Strive is a cookie cutter of strategy, but their balance sheet is cleaner. So if you want to use that as an argument to own Strive, okay, I won't argue with that. If you want to say Japan is the winner in China, I wouldn't argue with that. If you want to pick, whatever you think the winner is going to be in your location, I did a podcast with Tyler and Alexandre Lizet from Capital B, and so if you're in France, maybe they're your Huckleberry. You every country, every location will probably have their local winner. Metaplanet for Japan. There's a few avoids in here. I think Tesla's the big winner in the disruption space. Yeah, mostly it's just a bunch of avoids here. Um, yeah, if you can find someone that's either unique, which it doesn't seem like, I don't know, maybe somebody will figure out some cool way to get Bitcoin, but you either gotta, you have to provide a product or service, and it has to be competitive with all the other products or services out there. And right now, Strategy and Strive are offering better, um, basically alternatives to fixed income and bond market. It's like orders of magnitude better. It's over collateralized as fuck, and they're going to eat the private credit and equity markets. They're going to eat the bond market. I think Metaplanet's going to jump in there as well. Yeah, I'm not really finding anything that's getting me interested enough to spend any time on, like, researching. I've got enough irons in the fire. I got Strategy, I got Strive, I got Tesla. Those are probably going to be my top three. And then when situation arises, I've got my little token Metaplanet position. But when situation dictates, if I just don't have enough money to invest in the big companies, then maybe I'll find some mining companies to trade back and forth with. What's up, Emperor? Semler, yeah, thank you. Let's see. The Atlas robot of Boston Dynamics looks incredible. I think they belong to Hyundai now. Guess they see potential and scalability through machine slavery. Yeah, so Bitcoin is winner take all because it's a protocol. And then the robot thing is going to be winner take most. So I'm betting on Tesla as taking the most, but there's going to be billions of robots being built, and Like Tesla already has millions of robots that people are buying now, and they're called cars. They're wheeled robots. Um, they'll probably have the lion's share of humanoid robots, in my opinion, because they'll just plug the full self-driving software into their robots, and cars are operating in 3D now, and they'll just plug the algorithm into the robots, and the robots will be able to interact with the real world as well. And I just don't see anyone else with a generalized solution uh, to that. But yeah, the Boston Dynamics stuff will probably have a role. They'll probably be profitable. But to be fair, I haven't done any analysis on Boston Dynamics. So I'm actually speaking out of turn, really, because if I think Tesla's the winner, but I don't know anything about Boston Dynamics, my opinion on that really shouldn't matter. What's up, Tony? Early today, how's it going? It's going great. Hey, what's up, Mason? Glad you can make it. Let's see. Speaking of prefs, is the maintenance margin for strike also 50% or STRC? Is the maintenance margin? Oh, um, on Tasty. Oh, I don't want options. Yeah, it's full. But on Robinhood, I could get STRC on margin, but I couldn't on Tasty Trade. Eventually, once the hell? There's two STRKs, Starknet token. That's dumb. I can't even buy it on Robinhood. Oh no, I can. Let's see. Margin requirement is 50% on STRK on Robinhood, but it's 100% on Tasty Trade. So it's going to be exchange dependent. But it's this exact same scenario on Tasty Trade with STRC. I have to pay 100% for my STRC. Oh, I'm sorry. I'm sorry. Okay, I misspoke. I meant SATA. STRC does have a discount. It's SATA that I have to pay 100%, but this will come down eventually. Yeah, I have to pay 100%. Sorry, so Tasty Trade and Robinhood, STRC are both margin requirements 50%. STRK is full, or is 50% on Robinhood. It is 100. Now I'm fucking confused. Yeah, STRK is also 100% on Tasty Trade, unfortunately. So Tasty Trade's kind of behind the curve compared to Robinhood with respect to the prefs. But it's fine on stretch, so eventually SATA will come down as well. It's just going to happen eventually, like as SATA starts to smooth out. Once we see after the next dividend, and maybe it only drops to 98 plus, eventually Tasty Trade will come around as well. What's up, Voyager? Absolutely. What's up, Johnny? IBKR, they won't give any margin on stretch. No shit. Yeah. I don't know what their policy is, but I actually contacted the help desk on Tasty Trade, and I'm like, hey, what's the deal with no margin efficiency with SATA? And they're like, oh, it's too volatile right now. And I said, you know, is there anything that I can do to help push that along, or will you just do it automatically? And they're like, nah, we'll just review it. And once the volatility comes down, they'll decide to add the 50% margin requirement to it. All right. So with that being said, strategy's down a little bit today. I don't make predictions, but if I do want to mention like reasonable expectations, I mean, there's blue sky all the way to 300, which was the most recent support level before it crashed. But also, you know, we've got some local resistance. We've already tried 180, you know, one, two. Recently, you know, will this be a double top or will we just move up to 300? I don't know. I don't look at any of the TA stuff, but it's a pretty wide it's a pretty wide margin of error. Like, you know, do we go back down to 100, or I could easily see 125 again. But it would be nice to at least range 150 to 225. My butt was puckering when we were down to 100 in February. I was like, okay, am I gonna have to find my resume file and fucking dust that thing off? Um, yeah. So at this point, I know there are people who need to hit a lottery because they want to quit their W-2 job, or just, you know, hit it big before they get laid off for the. I avoided like 5 layoffs over 10 years when I was working in IT. And so I was kind of happy to be able to just quit on my own terms and not be forced out. But I know a lot of us probably feel the pressure of like AI and inevitability, like coming for all of our jobs. So that's why I just don't really mind missing out on some upside. Kind of I don't need the upside as much as I need to not go broke. That's my situation. So trade within your portfolio, trade within your means. You know, if you're making 100K a year at your job and you don't, you know, maybe you can think more long term and you don't need option selling in your life. That's probably the optimal way to do it until you get some big rally. You know, if you want to strategically sell options only after the rallies, that's probably more efficient than what I'm doing. But it's what I do, and otherwise I wouldn't have much to talk about on this fucking show. Actually, I don't know. I probably spend just as much time rambling as I do trading. So maybe I'll just turn it into the orange pill rambling show. Regardless, let's take a look at strategy. I think I probably have a little bit more extrinsic value in this position since the price came down a couple bucks. And if we stay here, if we stay here for like a month, I'll probably be able to catch these positions up. So as long as there's extrinsic value in these covered call positions, even though they're in the money, it's fine. If there's no extrinsic value, then I have to roll that out for some extra extrinsic value. But this really hasn't crashed hard enough to make me adjust these positions, so won't do anything there. Same thing here. Actually, this one only has 1 day left until tomorrow. It's basically a day and a half. So this extrinsic value doesn't look like much. But if I prorated this out for 5 days, that's like 125 bucks. It's not much. That is not much at all. So it probably makes sense for me to roll this a day early instead of waiting until tomorrow. 170s at the lower end of the expected move for 1 week, so that's fine. $237 credit would increase my extrinsic value by over 1% of the underlying price. So that actually makes this fairly worthwhile. Let's see if I can get this to go through. And let me reshare without volume so the YouTubers don't get their ears blown out. No insta-fill. All right, that worked. I don't think they listened, but I suggested that Tasty Trade put in like a feature where if you roll a position that's grouped, the new position would automatically appear as a replacement in the group. Synthetic covered call. It would save me the time of ungrouping and regrouping. But yeah, I'm sure they just filed that suggestion in the garbage. All right, Tesla. Let's got 1 day, $100. That's like 0.25% of the underlying price, but it's 1 day. So prorated out for a week, that would be 1%. So that's fine. Extrinsic value is reasonable. Same here, bunch of extrinsic value, even though it's, oh, interesting. Let me double check. Yeah, there's 1,100 in extrinsic value. If I collect half of that in 3 weeks, that would be 550 divided by 3, somewhere around 18 maybe. So $180 a week. It's not great, is it? 100. And 80 a week. It's less than 0.5%. So it's not great, but there is enough here. Like, the only thing that I could do would be to try to roll out to 60 days, and that just makes theta even slower. I know some people get really desperate and they roll out to 60, they roll out to 90, they roll out to 120, they roll out 6 months, they roll out a year. And I think that's just starts handicapping. I would just suck it up and let these shares get called away at 375 before I roll out to 6 months or 12 months, just to avoid, because in that scenario, that's just an advantage to the option buyer, in my opinion, and probably just delays the inevitable. And now theta is so slow that you're just dying a slow death. I'd rather just rip the band-aid off. So if Tesla runs to 450, 500, I'm just going to call it good. And like, maybe I'll let this thing get called away at 400 or 425 or something after a couple of desperate rolls. But yeah, I'm not going to roll out past the sweet spot of about max 52. Occasionally, I'll go to 60 days to expiration when the liquidity sucks at 45 or 50, because July 17th is the monthly. And until they fill in the weeks between June 26th and July 17th, those weeks when they do come out, the liquidity can suck, especially on strategy. Tesla's usually not too bad. But there could be a scenario where I might be like, all right, I'll roll to the 60 because the liquidity on the 52 DTE sucks. But I would need a reason to go out that far. Otherwise, if I can't roll for a credit at 52 days max, then those shares are just getting called away. I'm just going to exit that position and take it like a man. Let's see, 29 days left. 1500 in extrinsic. That's not bad at all. 4 weeks left. $400 a week, 1% a week. So that's reasonable. Long-term stuff. I started building a little SATA position here to kind of use as my dry powder when I don't really have enough to take a new position. Probably should have kept some cash so I can pay bills with, but kind of couldn't help myself. Cypher. These are the ones that I'm trying to wean myself off of. I've already worked myself down from like 80 positions down to 30, so I will continue to do that as Theta works its magic. And then I'm also adding some Strive positions here. So far, I've just got this one poor man's covered call, and I think it's slightly down overnight, which, yeah, Strive's price. Yeah, I think Strive could easily correct down to 12, which would suck for this leveraged position, but it's still pretty small position. What's up, Johnny? Missed you on True North. No lame dad jokes or Tesla chat. Yeah, man. I'll next time I'll send Mason some lame dad jokes, and he can slip those in for me in my absence. I got more Tesla comparisons in my belt too. Just saving them to slip them in at the right moment. All right. Yeah, decent amount of extrinsic. Got some time left. No reason to rush rolling this one. The 155s, man, that sucks. Let's see, I've got 1,300 in extrinsic, but that's for 2 positions, so $600. Half of 600 is 3, so a third of 3 is 1. This is only collecting about $100 a week. At the current price. So it's about a 0.5% of the underlying. That's kind of like the bare minimum. And it's funny because the TradFi option sellers that I follow, a 0.5% is like, yay. Because they're trading like Apple, and the premiums on a lot of those TradFi companies just suck so bad. So like this position is like the worst. This is the worst strategy position that I can imagine even holding, and it's just as good as selling like at the money cash secured puts in Apple. That's the difference in the like the vol that Bitcoin treasury companies inherit from Bitcoin. But with 42 DTE, I've only had this on for 6 days, so there's really not much incentive for me to move this. I got to wait for it to at least get down to, 30, 35 days to roll it out another week. Or the other thing that I could do is I've been looking for excuses to take poor man's covered calls off. So I could suck it up and pay the $3,000 here and roll this to a more advantageous theta and extrinsic value position and just take off some of this leverage. I've already taken off 2 of these poor man's covered calls, but instead of right sizing my in the money covered call position, I just aped into a bunch of Strive positions. In the IRA, I'm able to think a little bit more long term, so I just jumped into like 5 poor man's covered call positions, and I'm already running the wheel on the equivalent of 600 shares and 5 more cash secured puts. So this is like 1100 delta minus covered call action here. So in the IRA, I've been much more aggressively adding Strive positions. What would this do for me? If I close one more poor man's covered call, that would give me a $5,000 credit. That would basically pay for me to roll both of these positions to something that's a little bit more advantageous from an extrinsic value perspective. So I think that's what I will do. This will give me $5,000 to suck it up and pay that debit to roll up. If I can get this to fill someday. There we go. All right. That's giving me 4,900 in maintenance excess, which is basically my buying power, my new buying power. All right. So now I can afford to roll these up. I'm going to roll the strikes up, and I'm going to suck it up, and I'm going to pay some of the let's see, I don't want to roll up too much, because if we crash back down to 160, it's going to piss me off. So let's do 170. That's 1,100 in extrinsic value per. But it's I've got 1,200 in extrinsic. Oh, but that's combined. I would be rolling. I would be going basically doubling my extrinsic value from 600 to 1,200. Yeah, I don't hate that. And then if I do get whipsawed and this comes back down to 160, at least it's not too crazy. What about 165? Take it a little slow. It's 900. Yeah, let's not get too crazy with it. Let me see. $1,000 of extrinsic value. Cut it in half in 3 weeks. Divide by 3. It's about 1,600 a week. Oh yeah, we'll go 170. That's my final offer. Wait a minute. What was the bid ask spread here? $1? That's not bad. So I didn't dig myself all the way out of this hole. But just enough breathing room to pretty much double. Actually, yeah, I basically doubled the extrinsic value in this position. Still in the money. I could still go to one. The strategy could still go to 200. Easy peasy. But how much maintenance do I have now? $3,000. So, do I put that into a pref just in case I need it to roll these out again? Or do I ape into some more Strive positions? Oh, I think I just answered that question. All right, so I'm not going to add any more leverage, though. I think 5 poor men's covered calls is enough. But let's do $3,000 is actually perfect. I can do 215 strike. cash secured puts. Can I afford at the 1550? No. I can afford one at 1550. $14.86. Oh no, I'm talking myself into getting another poor man's covered call now. Because that's what I can afford. No, I'm not doing it. There we go. A little bit of cash. If I get screwed and I have to roll this thing up again, you know what I should have done? I should have bought a few more strategy shares. Because if the price does go up to 225, at least I'd get the price appreciation on that. Oh well, that's fine. Didn't appear in my account though. Let me refresh. There we go. I know I'm counter. The sad part is I'm counter trading Josh with that position. Josh Mandel was posting screenshots. He just dumped a bunch of his preferreds to go long strategy, and I'm like taking off some leverage and adding some pref. That's not a good feeling to realize that you are the other end of Josh Mandel's trade. All right. I probably sold him some of my 131 strikes last month too. All right. Plenty of extrinsic here. Long term. I've got my stretch and my SATA. I'm basically using these instead of cash as cash secured put backing. Plenty of time and extrinsic there. And then in this small account, I've got the one poor man's covered call in Strive. And I've got 3 cash secured puts. Ooh, my maintenance excess is shrinking. All right, nothing to do there. Johnny says, I wonder if Elon has met Saylor. That's interesting. I know Saylor's tweeted at Elon like, hey, if you want me to help you set up this Bitcoin infinite money glitch, you let me know. SpaceX could dump their 1.5 trillion IPO cash into Stretch before deploying it. I think SpaceX actually holds some Bitcoin as well. So that's kind of interesting. How much Bitcoin does SpaceX own? Or maybe we don't know. Is it private and we don't know how much they have? Oh, 8,000. No, it's not much in the grand scheme of things. Half of Strive. And oh, you know what? I wanted to mention this. I almost forgot. For you numerology nerds out there, Strive was number 9 on this list, rule of threes. They have 15,000 Bitcoin, and they bought 444 Bitcoin to get to 15,000. Obviously, 444 has its own significance. It's an angel number, but 4, 4, and 4 is 12. More rule of threes. And actually, now that I'm looking at it, Strive has 6 letters. If you really want, you could. This shit is all too easy to find those coincidences, but if you're into that kind of shit, have at it. Yes, I think I'm done here. But yeah, if I get hit with some margin, like this is my actual option buying power, $171 before I get a margin call. So if I got into any trouble with that, I can just peel off some stretch or some SATA. And no shade to Saylor, but as soon as Tasty Trade starts giving SATA the 50% benefit to margin efficiency, I'll probably start rotating out of stretch just to support my homies. All right. The 5K account. Probably nothing to do until tomorrow. These expire tomorrow, and these are actually going to work out. So I was very slowly. I think I had the $14. I might have had the $12 strikes. This pumped to 18. I rolled up to like, let's just look at my history so that I'm not making up shit. Where's the full history? So I was selling the 11. I rolled for a little profit. Where's the more calls? I had the 10.5 call. I had to buy that back for $240 per contract. And then I sold 100 shares to right size that position. So I let 100 shares get called away, and then I used the profits to pay to roll the other two, it looks like. Or no, to roll the other one, because I had two. Then sold the 13 strike. Then I started rolling step one of the wheel again, sold the $12 put. Then I had to pay $250 to roll this one. Rolled that up to 15.5. And then I've just been like slowly rolling these up a half a strike. Well, a full strike, but a half a buck. And then selling cash secured puts all along the way as well. And somehow, yeah, so I still just have that 100 shares. So I let 100 shares get called away around somewhere between 12 and 14, and then used that to pay to keep the other 100 shares. And then started selling more cash secured puts. So the point being is that I didn't roll all the way up to the 18 strike, which would have been like $600. You know, if I had rolled all the way to the 17, 18 strike to get out of the money, then we would have corrected, and I would have like wasted $500 a pop on that. So this one actually might expire out of the money or be so close that it won't matter. So that's kind of cool. Cypher's still getting wrecked. My brother-in-law and I will have to deal with that one next week at the latest, unless someone exercises on us early. That's always possible. It's got $4.46 of intrinsic, so that's like 24 cents of extrinsic value left. Not much. Someone could exercise on us at any time. Maybe we'll hold off until the middle of next week and see. But even so, even that 24 cents of extrinsic value is 1% of the underlying price. So we can literally just do nothing for the next week and capture 1% profit, even on this position that's completely underwater. Plenty of time left on the Strive cash secured puts out to June 18th. I did pick up a Strive Foreman's cover call here as well. I was trying to figure out if strategy's still in the $200 range, or even at the current range by the end of the month. Maybe I'll unload this position and do God knows what with it. Maybe I'll rotate into some of these Tesla debit spreads or some more Strive debit spreads. This was a disaster. These fucking pre-split contracts. All right, that's a whole lot of nothing in this account. Let's make that green before we end the video. All right, appreciate everybody for tuning in.